Good evening, everybody. Mike Vacchi, Princetontrader.com, here with your Thursday night market webcast. Okay, daily chart, and we got El Gapo big time on the announcement that from the president that on a certain level they're starting the process of reopening the government. Now, it's a process. It's a process, and there's going to be a lot of bumps, but it definitely caught the shorts leaning the wrong way into the close. So it gapped up immediately to the 70 area. It knocked around there for a little bit. It hopped up over the top. I wasn't long the gap. I'm just glad I wasn't short because I wasn't really fired up about the close. But by the time you got past 4 o'clock and past 4:30, clearly somebody knew something. And so we got out of the way, and I'm glad we did. And at this point, we're long 75 rather, against 73 because we were waiting to see if on the 5-minute chart, which I'll put in front of you now, let me zoom this in so we can see what we're doing here. So it gaps, it kind of hangs out here, 64, 75, 70. Then it does a little breakout, and it came back in to let us get 74, 75 right here. So I was waiting to see if it was going to resolve or if they were going to come back in, try to do a gap fill down there at 31.5. At least at this point, they don't seem interested in doing that. At this point, the Russell is trading at 1232.3. That's at 5%. It's limit up right now. I don't know if the mini is going to seek limit up as well. It's not exactly ramping, but it is steadily moving higher. It has a lot of stuff to deal with between now and any kind of a limit up. On the upside, you've got to deal with you got the 100-day coming in at 29.15, the 200-day 29.55. Upper level is bisecting that up in the 29.50 area. That's a ways away from here. We're at 28.84. But just as a preview of some potential, you start to deal with things like the 100. And then the ultimate test of a bull versus a bear market are the 200-day, the simple moving averages and the exponential moving averages. And when this move broke back in the very beginning of March 3, March 4, and March 5, when it finally voted below the 200, you can see how things accelerated to the downside. Are we destined for a retest here? Maybe. But it's the same thing I've always told you guys for years. I'm concerned about the next 10 handles in front of me. If we get those 10 handles right, we're in a position to get the next 10 handles right, and off we go. Right now, we're long 75 against 73, and we just printed 85. So there's 10 handles, and we'll deal with the next 10 handles. If this thing gets up to round number 2,900, it's going to, it should meet some resistance at some point. If tomorrow ends up being a weak day for whatever reason, this is certainly not the end of the road. If you think some of these governors aren't going to have something to say about it, they certainly are. And when you have those, dueling pianos going at it, you're going to get some pullbacks. I always get concerned about gaps like this, and that's why the first thing I always take note of is where's the gap fill line? 28.31 half. That's your gap fill. Okay. On any big pullback, on any big negative piece of news that's going to come out, that's going to push this market down in a meaningful way, we have to see how it's going to deal with that gap area. If they fill the gap and they bounce it and they keep it going, that's bullish. If it cracks the gap, if it heads back in towards 2,800, the bulls certainly do not want to be printing stuff with 27s again. Not for the foreseeable future. They've gone ahead and they have They've defended hourly chart. They've defended weekly pivot again. They've converted 2800, 2820 area was key. They withheld all of these pushes back into the 55 area today. And, you know, what I found myself sitting there saying this morning, as we were in a really nice short 94, getting back into 55, it was all, the table was set for the bears to be able to have a big day down. Economically, news flow, just the whole tone of the tape. They couldn't hold it. They took it down there twice, held it twice, here and here in the 55 area, and then, you know, steady up, and then off we go. And we'll see how this holds up overnight. The only lesson I would give you guys is this. We're going to get back into a situation now, if we continue to head higher, where the tendency is you're going to want to fade every high that you see, because you feel that every high that you see could be the end. Well, only one of them is the end. And you will sleep a lot better at night if you just kind of go with the flow. Personally, I think trying to find an interim top this week was a good. I thought it was a good trade, and we had a couple really nice shorts that we made good money on. But now that they've screwed it up, in my opinion, and the bears have totally screwed it up, from this point forward, you need to be looking to get on the side of price, because these rallies will go a lot further, faster, and they'll last longer than you think. So that's my 2 cents. Don't fight price. It's not worth it. There'll be plenty of time to take good shorts when the time comes. And there were good shorts to take this week, and we took them. And there'll be good shorts to take again. Until then, buy these dips. Buy these dips. All right. Everybody have a great night. I will be out with a market webcast first thing in the morning. Be safe, be healthy, take care, trade them well. I'll talk to you then. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.